Morning. This is Rick Ackerman, editor and publisher of Rick's Picks, with a live Facebook update. I'm going to be doing these twice a week on a schedule, Tuesdays and Thursdays. But if you want to be notified, just click the like button on the Rick's Picks page. Today, I wanted to talk about gold. By now, the uptrend is pretty well established, and I think the trick is really to just trust the move and not allow yourself to get shaken out. I want to show you today what happened, a very typical swoon that is going to occur before gold takes off. Looking at the 5-minute chart, you can see that, let me get a little more exposure, that we had a pretty nasty swoon after stocks opened. The broad averages were modestly strong, and that has a way of pressuring gold. But you can see from this low down here that gold has made a pretty nice recovery, about $14 worth at this point. What we are using to play gold, a lot of Rick's Picks subscribers have been on top of GDX, and GDX had a pretty strong close yesterday, and I bought some calls myself, but this morning the opening was pretty disappointing. But as you can see, and as I'm telling you, we need to buy weakness in this vehicle. Every time you see GDX, which is a great way to play gold, every time you see weakness, you need to buy it. You certainly don't want to be buying puts as this thing is falling to hedge any call positions you have. The calls I'm most interested in come from kind of a visual point of reference. If I look at the hourly chart, you can see, based on how this thing moves in a few days, it could easily make it to $30 over the next few days. So we don't want to go too far out on the calls. You can have some long term, and I would suggest hedging them. For instance, buying the 30 or even 31 strike calls that expire late in October, early November, perhaps. And as GDX goes higher on any strength, you want to be either taking partial profits or selling strikes that are closer in, essentially creating calendar spreads. And as it moves higher toward the strike, your goal is to have the option that you're short, the shorter dated expiration, get close to the strike, but it'll expire worthless, and you simply roll into the next week by shorting it. So the series of calendar spreads over time should pay for your the calls that you simply hold as a long-term position. So again, I'm just kind of scalping it on what I've been telling you, namely that any weakness in this GDX vehicle, which tracks mining companies, is an opportunity to be buying calls. Any strength you can hedge with puts. Don't worry about the puts. Keep them in a ratio where you could lose your entire investment in puts. They're good protection, and certainly a good scalp on days like today, because to repeat, you want to be selling those puts on any weakness, or perhaps on the flip side of that, just buying calls. So that's it. I'm more worried when I trade gold about gold simply running away from me, and it's been very tricky in that way. Gold has been just beginning to move out of a bear market that began in 2011, and in that situation where bulls have hung tough for so many years, it's tempting for them to think, oh, gold's finally moving, now I can finally get even, get some of my money back. And that's why bulls are typically left in the dust when a bull market begins. They're so eager just to take a small profit that they don't realize that the big one lies ahead. And I think that's what gold is doing right now. With respect to GDX, I'm using this pattern right now on the hourly chart to project a 31.46 target. That's a little more than 2 points above. And you can judge for yourself about how many days it might take, a week to get there, assuming we get continuing strength in gold. So you don't really have to go out further than a couple weeks on the calls, but you may want to do so to give yourself a little room to short calls of a closer in expiration date, but at the same price. If you offset with vertical spreads and things like that, it's going to create margin headaches for you. So not that you can't do that, but you'll have to decide for yourself what kind of leverage you want. So again, the key takeaways here are don't wait for weakness to come in gold just to buy it. Certainly, I'm suggesting that you do, but you need to be prepared for gold to not oblige our hopes and prayers by simply coming down to bargain levels. We may not see that other than instances like today where gold swooned for about 15 or 20 minutes. So that's it for today. And again, the next planned presentation is Thursday. So stay tuned and you all have a very pleasant good day.